and maybe I should show you guys right now. Here's the Edge Finder, which is just officially released. We've got a video coming out later on it today, so stay tuned if you've been wondering about this, if you've seen this thing. If you've never seen this thing, whoo, man, this is the place to be.
Oh my.
How's it going, everybody, and welcome back to another episode of Top Buy, Top Sell here in the A1 Edge Finder, where we are going over our number one listed buy and our number one listed sell in the Edge Finder. Now, before we get to that, we always take a look at two things before we get into it, and that is COT data and retail sentiment. Now, I've been talking a lot about the Edge Finder recently in these videos and some of the changes that we're making, and you can see video to video all the little subtle things that we are doing. Right now, this month is our 2-year Edge Finder anniversary, so it's actually on sale right now, 40% off. We have a massive 40% discount on the Edge Finder. So if you are enjoying what you see here as we go through just a fraction of what the Edge Finder can offer you, I hope that you guys consider checking it out while we're doing this major discount. But I'll go ahead and jump right in to COT data, and we'll get into some analysis. So here we are in our COT data page. This is the commitment of traders data. This is what institutional traders or smart money traders are buying and selling at the moment. And here up top, we have this super simple bar chart that basically just shows you the overall short and long percentage of all the different assets that we're tracking in the Edge Finder. Right now, institutional traders are very short on things like the Australian dollar and the Japanese yen, and they are long things like silver, oil, and gold. US dollar is right around 50-50. In fact, the last time I looked at it, it was just barely over 50% on the long side. Now it's just barely over 50% on the short side. So week by week, this stuff is getting updated as the new COT reports come out, and it looks like from last week to this week, there was a negative change when it came to US dollar sentiment. They went a little bit more short on the dollar. In fact, we can actually check out what the differences are week by week, but looking at the latest weekly COT filings, this chart down here compares last week's COT data to the current COT data, and we can see the difference in the amount of long and short contracts either added or taken away, the overall long and short percentage, of course, but then the net change percentage is really what we're looking at here. So this is ordered from the greatest net change in the positive direction up here at the top, and the greatest net change in the negative direction down here at the bottom. For example, up here at the very top, you'll see the S&P 500. From last week to this week, they added 37,513 long contracts on the S&P 500. Now, they also added 13,265 short contracts, so it's not like every smart money trader is in agreement that they want to go long S&P right now, but there was vastly more long contracts than there were short contracts. Now, on the other hand, and keep in mind that this is the total difference, so that doesn't mean to say that no institutional traders closed their long positions. We'll see right down here, New Zealand dollar, overall 4,384 long contracts were taken away. There were so many long contracts taken away. over 4,000 of them, and 1,451 new short contracts open. That is a huge net change differential to the downside. But check this out. What I was just saying, the US dollar was just barely over 50% last week. This week, on the long side, I should say, this week it's just barely over 50%. On the short side, we can see exactly why right here. 3,641 long contracts added, but nearly 5,000 short contracts added. I could tell just by taking a look at this and remembering what COT data looked like last week that there was going to be more short contracts than there were long contracts. So this is a really cool chart here because you can kind of see how the sentiment is shifting from bullish to bearish, long, short, in the minds of institutional traders on a week-by-week basis, which is super, super useful information. But let's jump into retail positioning now and see what day traders are going over. So I'm going to start with major currency pairs only, and then we'll go from there. But right now, not institutional traders, day traders are long things like the Australian dollar against the US dollar, as well as New Zealand dollar against US dollar. Those are both bearish indicators for us, and they are shorting USD JPY. That's a bullish indicator for us. Let's check out indices. I'm going to throw in metals too. We've actually added a lot more metals than what we used to have. We've added copper, platinum, and iron. As well as we've already had gold and silver in there as well. But right now, they're long these assets here, which is a bearish indicator for us, and they are shorting the US 30 and the German 30, which is a bullish indicator for us. And finally, let's finish up with, oh, you know what? I should have thrown commodities in there as well with their oil in there. They're long oil, so that is a bearish indicator for us, but minor currency pairs, we'll finish up with this. USD ZAR, CAD Swiss, Swiss Yen, NZD Swiss, and NZD CAD are all long right now in the minds of day traders. Those are bearish indicators. And Aussie CAD, Euro Aussie, Pound Yen, and Aussie New Zealand, those are getting shorted, so those are the bullish indicators for us. All right, let's go back into top setups and remove any neutral biases that we have. We have no very bullish and no very bearish biases. However, we do still have a pretty decent list to take a look at here. Just 3 buys. It's the German 30, oil, and USD JPY. And we have 6 sells. We have the UK 100, Euro USD, Aussie USD, Pound Aussie, Pound USD, and New Zealand USD. So we are going to take a look. We're definitely going to take a look at NZD USD. That is clearly our most bearish asset. And we usually stick to currency pairs, sometimes commodities like gold or oil. We don't usually talk indices, so we're not going to take a look at the German 30. And when it comes down to it, I like to stick with currency pairs. So let's take a look at USD JPY as well as NZD USD. And in fact, why don't we even start with NZD USD? I usually start with our longs, but we'll start with our shorts today. So FX majors, open it up to Euro USD. We want NZD USD. And here we go. So NZD USD has that bearish bias, -8 score. COT data is a -1 score, and retail sentiment is also a -1 score. Now, technically, both of these are favored on the short side. However, if you are familiar with the Edge Finder, or if you've seen these videos before, you know that I like to talk about the magic number, and that is 60%. We do not score any sort of sentiment until it crosses over 60% one way or the other. That way it is clear and it is obvious that it is favored one side or the other. Otherwise, it's too close to 50-50, and we don't want to score anything if it's not clear and obviously favored in one direction. So even though the New Zealand dollar is clearly favored on the short side, this does not technically get a bearish reading in the Edge Finder until it crosses over 60%. The reason that this has a -1 score, however, is because both of these have been favored on the short side when it comes to their recent change. They are both being favored in the red. That is giving us a negative score there. Now, retail sentiment, on the other hand, has crossed over 60%. In fact, it's at 70% favored on the long side. And like I've kind of mentioned, the retail sentiment, the inverse is an indicator for us. So 70% bullishness on the NZD USD pair from day traders actually give us a -1 bearish signal right there. Seasonality is also a score of -1. And we can see now that we are in the month of April. Historically speaking, over the last 10 years, averaged together, NZD USD typically does trade lower in the month of April. Our trend reading is a score of -2. And to get a better idea of how it's actually been trending, we do have this score indicator here, which shows you day by day what the Edge Finder score. Now, granted, the Edge Finder does change its positions, change its scoring. It's constantly getting updated. So the score does change throughout the day. But whatever it closed the day at, we keep track of that. And so it has been a negative or a bearish bias for a while now. But let's take a look at the actual price chart and see how it's been trending. So price forecast, we can pull up NZD USD. In fact, I'm going to search it, NZD USD. And there we go. So this thing has clearly been in a downtrend as far back as we can look at. We're seeing information all the way back to March 15th right now, and slow, steady decline in price is what I see right here. Price forecast does predict that it's going to continue to do so. But yeah, nothing too crazy, no huge drops or anything, but just slow, steady decline in price for, nearly a month at this point. We can finish up with our fundamental data now. We have interest rates and services PMI as positive scores, a +1 and a +2 score. GDP numbers and retail sales numbers both come in at -2 scores, and manufacturing PMI, employment change, and unemployment change are all neutral scores. We have added a bunch of new scoring metrics over the last month or two to the Edge Finder to make our scoring and everything even more accurate and up to date as we can. These are all things that we are, hoping to continue to implement and continue to improve the Edge Finder on to make this the ultimate trading tool. And I'll say one more time, just really quickly, that it is 40% off right now. So you can find it in the links down in the description below. And you can also find it on our website, a1trading.com. But yeah, Edge Finder 40% off right now. Use promo code A1YT at checkout to get 40% off the Edge Finder if you're enjoying this video. But let's finish up with our fundamental data. We can see GDP growth in New Zealand is currently -0.1% compared to 3.4% in the US. MPMI 23.2 compared to 2.5. Retail sales numbers -0.9 compared to 0.4. Inflation in New Zealand 4.7% compared to 3.2% in the US. Unemployment 4% compared to 3.9%. And lastly, both interest rates in New Zealand and the US right now are 5.5%. So there we go. There is all the data and numbers backing up that bearish bias -8 score on the New Zealand dollar US dollar cross. The other pair that we said we were going to take a look at was USD JPY with this solid +6 bullish bias. COT data is a score of +1, and retail sentiment is also a score of +1. Now, like I've said, we don't score this until it crosses over 70%, which it is on the yen. In fact, the yen, I believe, was the most short asset. It was either the yen or the Australian dollar was the most short asset according to COT. It might have been the Australian dollar, but nonetheless, nearly 76% of institutional traders are shorting the Japanese yen at the moment. Both recent changes have been negative, but retail, 82% of retail traders are long Japanese yen right now, and that is a bullish indicator for us. Seasonality is a score of +1 as well. And again, we can see in the month of April, historically speaking, over the last 10 years, USD JPY typically does trade higher in the month of April. Our trend reading is a score of +2, and we can see that this bullish bias really just happened. A few days ago, we had a +5 score, which is technically a bullish bias. +4 is close, but that's technically a neutral bias. So I'm curious to see what this looks like, because overall, we've had some really neutral scores on USD JPY. Every once in a while, it peaks up into a bullish bias, but it hasn't been able to maintain that. So I'm curious to see what this price chart looks like. So I'm going to search up USD JPY. There it is. And okay, so this thing was moving higher. It actually spiked in price March 19th to the 22nd. It had a big move higher, but since then it's kind of been in a range. It certainly hasn't moved any lower. In fact, over the last 2 days, it looks like it's had a little bit of an increase in price. Price forecast is projecting that it was going to continue to move up in price. But yeah, that definitely kind of lines up with what we're seeing out of the Edge Finder. It doesn't really have a clear direction one way or the other. In fact, I'm curious, March 19th and March 20th, those were 2 bullish days in the Edge Finder, and I think that's when that big move was. Yep, March 19th all the way to the 22nd. You could have caught that move if you had the Edge Finder, just saying. But let's finish up with our fundamental data. Fundamentally speaking, this is looking very, very neutral. So this is more trend-based than anything, but interest rates are a -2 score. Oh, excuse me. Inflation is a +1 score. Interest rates a -2 score. Manufacturing PMI a +2 score, and everything else is a 0 or neutral score. All right, so let's finish up with the Japanese yen numbers, because we just went over US numbers when we were taking a look at NZD USD. So we'll just finish up with the Japanese numbers here. GDP growth in Japan, 0.1%. MPMI, -0.8. Retail sales numbers, 2.5. Inflation in Japan, 2.8%. Unemployment in Japan, 2.6%. And lastly, interest rate on the Japanese yen at the moment is 0%. So there we go. There is all the data and numbers backing up that +6 bullish bias on USD JPY at the moment. I hope you guys enjoyed this video. Again, this is just a very small taste of all the different stuff that the Edge Finder can do for you. There are so many useful trading tabs in here, and we are doing a limited time sale right now, 40% off the Edge Finder. Go check it out. We have links down in the description below. You can also find it on our website, a1trading.com. I hope you guys enjoyed the video again, and we will see you in the next one.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.